Good evening. This is Nick Inman from VolumeProfileTrader.com on Saturday, January 28th, and we're going to look at the market, the S&P, a few stocks, commodities, but generally speaking, a lot of things look the same way. Basically, a run-up for the last month, and a lot of names are in position where there could be a potential pullback, and a decent one at that. So and when I mean decent, I mean 3 to 5%, and everything's still okay in terms of the uptrend that we've seen. So I think that's just something to take in mind, and to not really feel like if you're this thing's just going to keep going without you. It's probably not, and I would be surprised if we really got through this 1329.75 level without some type of not necessarily more consolidation, but more of a struggle. And I would be more inclined to see trade up in basically holding above this point of control, 1308, which we've continued to talk about as being support. And until that breaks and we start moving lower, consider this. I think this is 200 period moving average for a 1 hour chart. So this is the average price over the last 100 bars, and there's no coincidence that it's kind of right by 1308. So if we break below that and start trading lower, you can expect a pullback down towards 1290, which is really the next level of volume. I mean, there's some at 1294, but I wouldn't really consider that. This is a lot of buying pressure, and this is a lot of activity, these recent prices. So the movement, the potential movement, is greater when you have bigger volume, because obviously there's more people involved, there's a lot more money at stake, both long and short. So that's just something to be aware of. And so a downside target, 1290 down to 1285, and then potentially 1276 down to 1270 or so. Really 1272, but everything's an ish, and it's not going to be that big of a deal. Generally speaking, where support's going to be, and I'd be looking down to this 1275 level. However, keep in mind, value area low for January is, call it 1279, and value area for the last 90 days is 1290. So 1308, that's your main area. If we continue higher, then that's great. It's the trend continues, but 1325, 1330, that was the level we were looking at. And the reason why, because it was, and let me just zoom in, bear with me for 1 second. It is the point of control level. You see the huge volume that we've seen here the last 52 weeks the market has traded. So it wouldn't be surprising that there's a lot of consolidation, really. Consolidation that could go up for a month's time. We've had, really from the October lows, we've had an amazing run. I mean, close, 250 S&P points higher? That's very impressive. And people who bought down at those levels, even down at these levels back in August, September, any pullback in November or December, it was right to be a buyer. And we've seen everyone be rewarded from there. Sure, there are a lot of institutions that are still underinvested, but just be aware, where we're sitting in the trend. We're probably going to have some type of consolidation. And you could see potentially, there's not much volume over the past year to really support any downward movement. Obviously, the levels that we just talked about on the hour chart, but, looking at this longer range chart, you can see that, this potentially could be another topping area. However, when you look at, the NASDAQ breaking out to new highs, this looks good. Expect a pullback, but anticipate to buy the pullback. And the Dow, it hasn't made quite a new high, but any pullback back down towards 12,300. That's where you really want to be getting interested in buying, and that's about a 3% pullback. So just be aware of that dynamic. I guess we can go into gold. Gold continues to run off this point of control low for the year. We are at the basically last swing highs, the top of the Donchian channel. If we bring it in to a nearer dated chart, and it's a little sloppy, but we've had some nice consolidation between 1728 and 1722, a 6-point range or so, and we're moving higher off of those levels. We are going back into December. We have some high volume here, 1750 or so, and then from there, we had one big range, but basically, if we do get above 1750, expect 1800. I mean, that it's just that psychological name. That's where they're going to be, the buyers are going to be pressing it to, and realize we are 60 points away from the highs in gold for the last couple of months. So I think that's something to be aware of. If I can zoom out a little more, you can see, so really call it 1770 down to 1750, sorry, and then up towards 1830, 1825, that's September's point of control. You'd look for some type of resistance there, but those are psychological numbers. I would be happy to say that many people that have wanted to sell gold and take profits did so sometime in this period. And that's not to say that there won't be any resistance, but you can also help conclude how much gold has ran in the last month, and realize that no selling pressure has even come close to changing the trend from the current uptrend that we're taking hold of right now. Oil, this continues to consolidate within this range. Top of the channel being 103. I guess you can say bottom of the channel 92, but we've been consolidating at 97. That's been our floor. We're going to get a move one way or the other, and to help, we can zoom it in to a near dated chart. I'm going to zoom it back into 90 days. Okay. This breakout, we had uptrend, consolidation. This attempt to break out to the upside fails. So what does that mean? It means that all of these there is more trading activity, pressure building along this range, and it's going to lead to a breakout. And I guess where I'm trying to get to in terms of a point is, if the longer this consolidates in this range, the more potential there is for a bigger size move, whether it's to the upside or downside. So it's not just, you just have to realize that the markets go up and the markets trade sideways, and you can make money in both markets, but when it's trading sideways, you have to be aware of that and realize that there's opportunities on both sides of the market. Obviously you can remain a one-sided market player like a buyer. That's generally what people do. But if this starts to break lower, that's just something to be aware of, and you can make money to the downside on oil without a problem. Realize below January's point of control, even below December's, well, actually trading at December's, if we break above 101, I would assume we're going to go and test the highs, and we may get some type of breakout to the upside, run to 110, 115. It's just going to wait and see approach. Natural gas sure looks like it's bottoming. This looks good, and I'm not saying that you should be a buyer, because the nice move or the low risk move has already happened. But this looks like it's going to $3, and the reason why is because if we break above current levels, $2.80, there's no volume that's occurred that's going to stop this from going to $3. It's just not. And so you expect to move, it may get shallow of $3 by 5 cents, but generally speaking, that's where you want to be. Look at names like Chesapeake. It looks like it's bottoming, and if I can bring in a 2-year chart of Chesapeake to make my point, and I didn't get it. Okay. It's holding its point of control for the last 2 years. I think that matters. What I think it really means is we're going to have a potential move in Chesapeake to the upside. You can manage your risk by keeping a stop either under, basically around $20, or really under these most recent lows, under the point of control for the last 2 years. Realize, though, that it could take a little bit of time. That's like Alpha Natural Resource. This thing is, be a part of this. Buy some. This is a 2-year chart, and look where the majority of the volume is. I mean, this is screaming, buy, buy, buy. This thing's going higher. What's going to stop it? I mean, it's hard to put a number to the upside just because there's no volume until you look up at 55. I mean, there's a little bit at 40, but if I bring it down to a 1-year chart, there's really nothing. So Alpha Natural Resources looks pretty good. Walter Energy, let it work for you if you remain long. I have to say I took my profits, and they were still good profits. Of course, I'd wish I was still holding, but that's not the case. Euro looks like it's made a short-term bottom, and it looks like it's going to trade up to 135. You can reconsider selling there, but and you probably will make money, but realize that 126.27 is definitely the bottom of your range right now. The dollar index, I think the 2-year chart best describes what's going on. We talked about this value area high, swing highs from last year. We had the point of control for the last 2 years up at these levels. You can see the selling pressure that's really occurring. Sure, we're going to get some type of bounce at 78, but is that something that should be sold into? I think so. American Express still riding this, not interested in selling yet. Enjoy the ride higher. Freeport-McMoRan sure looks like it's made a top, and short term, possibly, or a longer term top. But I see, and I'm going to zoom into a 1-year chart. I see that Freeport has tried to get into this huge high volume area, and what's happened the last few days? We've opened higher, traded up, made new highs, traded lower on the day. Same thing with the Friday, but we made a lower high and a lower low, but it was the same type of price action. Any strength was sold into. So what does that tell you? People are looking to sell back Freeport, or I should say take profits, whether they wrote it a higher or basically sell it back if you bought in this zone. So realize from 48 to 56 is resistance in Freeport. Sure, it can go to 56, but if people are selling like this into the 48 range, you got to get through that first, and there could be a decent sized pullback on Freeport. So just something to be aware of. Las Vegas Sands having a pullback but closed higher on the day. That's good. I still think this is a buy on any weakness, and hopefully enjoy the ride higher. MasterCard, just to show it, consolidating. This looks good. 340 looks like support. Getting low volume, which is a little discouraging, but that doesn't mean it can't go higher. Just keep your stop around 333 on the downside. Banks running into a little bit of resistance, starting to, made lower low, lower high on Friday, and just be aware, lock in profits if you have them. This could be some top of the range. I'd still be a buyer on weakness, and that's just something to be aware of. Now, XME did good, metals and mining, partly because of gold, silver, obviously natural gas did well. This matters, and it's just something to be aware of. If you're looking for some type of outperformance, go with what's performing well when the market's relatively flat or a downward bias. I think that matters. Amazon, we've seen a nice bounce off these lows, value area low, literally bounced it, has gone higher since. This is a name that I've played from basically by selling puts and collecting premium. Even did a call spread this past week, made some pretty good money there. So Amazon continues to work. Apple, any weakness, be a buyer. It's making sense to be a buyer on Apple. This looks like it wants to go higher still, just for the fact it's not selling off. And people are saying that it should be higher because of its earnings, but at the same time, it's had a nice, we've gone from 360 to 440, 450, and it's not a huge move, but it's a nice move nonetheless. So, EMC, hope you're long. We've been covering this since 22. You should be long. But if not, unfortunately it's tough to get involved now. I'd be looking to sell 23 and 24 puts, trying to put the stock and then selling some outdated, out-of-the-money calls. Ford, take advantage of this weakness. If you can get it closer to, call it 1150, that's really the buying opportunity that you want. But if you don't have a position in Ford, scale in a little bit here. Buy a fourth of a position and just be involved, because it looks like this is going to want to go and test $14 and $15 on the upside. Google, this was a name that actually, I had a trade, I had a bull put spread on this, and the strikes I chose were 380 by 370 or something, and I ended up closing it for a loss, and it's frustrating to see that. It would have been okay, but I think Google's made a bottom, and I think you can start scaling into Google, whether you want to sell put spreads or do call spreads. Realize that it's a really expensive stock, so option trading usually is the best solution for a name like Google. Alright, Marvell. You can see the trading range we've seen. If we start to poke our head out, this is something you want to be long. Look at the buying pressure we've seen. Go ahead and buy some of this stock and expect higher prices. Just buy some and set a target at $19, and when it gets to 19, sell it. Similar, Nvidia, this sure looks like it wants to break out and go test $18. Similar thing, just go, or you can go out to say 3 months out and buy a $15 call option, and whatever the price is, say it's $1, set your stop at 50 cents, so the most you risk is half the option price, and then if it's $1, set your target for that option to sell it at $2. So you're risking, 1 to make 2, and it's not the best. It's a good risk reward, but it could be better. I'm sure though that you'll end up selling for $2 and enjoying those profits. So really, I'm looking at, I guess the last name I can cover is Walgreens. This still looks good. Looks like it wants to break out. If this looks similar to a little bit Alpha Natural Resource, where there's not much volume above it. So if it really gets going, it'll go test 37, and that's 200-day moving average, recent, latest swing highs, and then from there you would assume it'd go test around 42, which is the top of the value area, and big volume up at those levels. So anyways, I hope this helps, and I hope you're trading well.